Good morning, everyone. Welcome to the Euro Trade. I'm your host, Market Stalker D. If we're meeting for the first time, I've been trading for 18 years total. 13 years out of that, I've been working as a prop trader for various prop firms, specializing in commodities such as precious metals and energies markets. Today, I'm going to probably focus on silver and natural gas later in the day. So let's have a look at what London is doing at the moment. Now, for this time of day, I would prefer to trade DAX, and I do have a long DAX position at the moment. But we cannot trade that just yet on Topstep. So my DAX position is 24,406. I have a bit of a wider stop just in case they go down to wick below this low here into VWAP. But yeah, basically I'm looking at something called strength inside initial balance as a setup, trading towards the next round number, which is 24,500. In the past on DAX, that has been a pivotal point. So we'll see if that can get some traction. The reason why I went into a long DAX is because we went above the Asia range and we did not have the standard sort of smash and grab then reverse type setup. For the London Open, they actually just went higher, which can be a sign of a bullish momentum. And in this session, you don't really want to fight that if you see it. That kind of goes across the board, but London, when it comes to metals, can be a little bit tricky because in most times, this is a weird period where Asia is finished trading and then London Metal Exchange doesn't really start until my 11:40 time, and right now it's about 9:33 a.m. so we have a little ways to go. So typically you will see volume drying up on the vast majority of the days. That's not to say that on some days you won't have, good movement, but they're the oddities, they're not the norm. But I still want to have a look at the levels and prepare for what's to come. And then maybe, just maybe, if we get some kind of a scalp, maybe if we get a bounce from this X2 level, which is currently sitting at 51.50. But there is a very good chance that silver tests VWAP and the call wall, which is a bit lower at 250. So both sides of the picture are in play for this time of day. But because of the larger time frames that are currently invalidating the previously created drop-based drop supply, I'm expecting it to rise up to 52,600 at the very least. It is a strong upside market, although a little less strong, I would argue, than gold. However, silver tends to be a little more a little less crazy, a little less crazy than gold these days. But please be aware that if you are on a small combine, even micro silver, which is what this is, it's pretty expensive. It's $5 a tick, and for every handle you have 2 ticks. And yeah, so we're going to see what they want to do with this. First step is to wait for the initial bounce to be broken. And I would expect them to do a break of IB high, maybe do a little failed auction. But whether X2 is going to be strong enough to stop it remains to be seen. And we are in positive gamma territory, so we would expect that there will be some kind of a slowdown at the very least. Right, DAX is popping to the upside nicely. And going into a higher high. So that's pretty drama-free so far. And on DAX we have a mildly positive delta at 121. And they keep pushing it higher through the sweeps. So if you see the sweep here, see all of these, that's a sweep. All right, so first things first, where is our value area from COMEX? I have the volume value here. And now the TPO values will be a little bit different, but they're not like drastically different. So the value high is sitting around the round number of 51. There is some demand there that is not exactly the swing low, but it's more of a kind of an inside low that brought another sort of pullback and then a continuation higher, and that could be a very, very good area to fish for intraday longs if we do get them. But if the trend is really strong, then we won't even tag that. So remains to be seen again. The range is so far almost exhausted. So we practically went into a move during Asia, during late parts of Asia, that has already traversed about 75% of the day's range. So I want to see that maybe exceeded and then a pullback, and then perhaps I'll have more of a scalpy type trade, even though I will probably be able to get 2R from it. But yeah, that is the outlook on silver. Yeah, silver is pretty expensive. So full silver is $25 a tick. So you definitely shouldn't be trading full silver on your combines, especially if it's a 50K. But even micro silver would be more suitable for 150K. So, you know, bigger drawdown, bigger allowance, just to make sure you have some room to risk about 300 a trade on that. And that means if you were trading full silver the way I do it, do a little calc. So the way I do it, that would mean a 45 tick stop, and you'll be risking over $1,000. So, you know, unless you're in an XFA that has a pretty nice balance inside it, just don't do full silver. But yeah, micro silver is acceptable, but it is still expensive. So, you know, to compare it to some other products, like for example, RBOB and platinum, they are full contracts with RBOB trading for $20 per tick, and platinum is $5 a tick, and that's a full contract. And as a comparison, silver micro is also $5, so it's not really a micro, if that makes sense. Andre is saying, how did your natural gas trade go yesterday? Yeah, we had another little pop that allowed me to take some profits. So it did start happening after hours. So settlement came, and then they did another pop, and then I went out. I actually had other things to do as well, so I couldn't really sit there and babysit it. And then there was a pullback. There was a pullback during power hour, and that's pretty late. But today, let's have a look at natural gas, actually. This was all from yesterday. All right, so the contract gap has been filled. Now, I do believe coal wall is different today, so let's see. Yeah, so it's down at no, actually it's the same, 450, so that hasn't changed. Let me locate my other chart. So ADR high exhaustion point is 469.4. So let's call it 470. Just to round it up. So nowhere near that. Nowhere near that. And then the average daily range low is 4395. And let's have a look at GEX levels. GEX 3 is actually not far. It's 455, exactly where we're right now. Just rename that. And let's drop down to a 30-minute time frame. Was this yesterday? No, that was the previous day. Let's plop a volume profile fixed range for yesterday's trading. So here's NYMEX open. And then we're going to drag that all the way to the end of electronic trading because I like to have a look at all of that. So right now we're inside value from yesterday. That for now, this early in the day would spell, balanced markets. So they're all agreeing on that price. Obviously this could change as we get closer into pre-market NYMEX. So let's see what VWAP does. If they go higher, would certainly be interesting, but I would expect to see them going down at least to this call wall. So I don't necessarily think that GEX3 is going to be the one. GEX2 is all the way up in 470. So again, bullish outlook with a couple of other minor GEX levels on the way. But at the moment, I think are we still inside initial balance? So we just popped outside of it, but Asia high is up here, and you also have the previous day's high. They will probably take that before they do any pullback. And where's Asia low? Is this one. So again, Asia a little bit more active than normal after basically into the last hour of Tokyo. So that means natural gas is coming to life slowly. Okay, DAX is pushing. It's at 455 now. And the way they are kind of creating a shelf on the contracts, see this? They kind of create almost like a stair step. And yeah, there are these guys here, but I don't really expect those to be broken. The bubbles are green, and the delta is growing, so positive delta. So until that changes, I'm just going to hold on to it. And what is volume doing there? All right, we've had one higher volume candle. Let's just do this. And I suppose if we go below 440 on DAX, I would want to exit that. I mean, some people would put a trading stop somewhere there, but I don't want to do that. I'm just going to let it do whatever, and then if I see it melting through it, I'm going to pull it off manually. So we have to use those OODA loops, or OODA loops, as Anne-Marie likes to call them, which is a fun way to say them, OODA loops. That means observe, orient, decide, act. So since we are retail traders, we are always at a disadvantage. We don't have rebates, we don't have size, we don't have anything. Even if you have size, but you don't have all the niceties that market makers are provided, we're always at a disadvantage. And that means you need pretty robust ways to track how your trade is going. I've always been against just moving stops to break even, especially if you're like already 50 ticks in profit. It's like, why don't you, if you think the trade is not going to go further and you think volume is drying up, why don't you just take the 50 ticks? Why wait for it to go all the way down? And then you get peanuts, or you get diddly squat, because you then have commission charge, but not much else to show for it. And to me, that's always been like fake accuracy. It's like, well, 85% profitable, great. But like 60% of those are break-evens. Is that true accuracy? I would argue it is not. So I try not to mess with my stops too much. And like I said, if I feel that the trade is no longer valid, I'll just take what's there. So keeping it simple. All right, silver is breaking through the initial balance slowly. So we'll see what they want to do with that. Now, natural gas, I would prefer to see it sell off first. Maybe to get down to that 450 call wall. So basically the edge of the value. Maybe even go a little bit under it. And then to quite possibly have a responsive long setup, which is basically when something opens inside value, and then the market makers decide that they will hedge against that sell-off, because that's what they do, right? They sell in a positive gamma. They will sell against any perceivable rally or a sell-off. So once that happens, they will frequently bring it back into value on inside days. And for now, we are inside value. Now, like I said, this is subject to change the closer we get to pre-market. We might just pop outside of it or below it, and that will change some of my hypos as the day goes on and more market-generated information is created for me to read. But as it stands right now, we are in balance. And that means maybe range-bound strategies. Tomorrow we have the natural gas inventories coming out. But for today, I will probably just wait for pretty late in the day, kind of similar to what I did yesterday, right? So I waited until the final sort of 2.5 hours of NYMEX and then entered a trade literally just before I went on to the group coaching with Hoop and Gabe. So yeah, that's probably going to be the plan for now. Just basically let it do whatever it's going to do, and then towards the end of the day, snipe it. Is there anything to say about shorts? I mean, this move yesterday was pretty strong, but it is a weak structure because usually these moves are made on lower volume. You can see that in this area on the fixed volume profile. Call it a single print, call it FVG, call it whatever you want, but it's all the same piece of information. It is a low volume area where the prices move pretty quickly, and they are basically representing unfinished business. So when you see that, there is a very good chance if we start to break the structure below, which would be call wall given way, so below 450, you would then start to see a more aggressive move through this entire area and a full pullback. So as an ideal situation, if we get down to 4,350, which is ADR low, I would definitely be looking for an auction fade back up to either initial balance low or maybe even VWAP. If that ends up being lower than the initial balance low, that becomes my target. For auction fades, which is basically a successful auction to the downside, but they fade the auction the other way. And I love doing those trades towards the end of the day. They're very systematic, very obvious to see, and they usually are accompanied with quite a bit of volume because it is the end of the day. People need to like flatten and whatever. But generally, I am bullish on natural gas because of the time of the year and the fact that we are getting some colder weather now. So that will all naturally, seasonally, kick up the demand for natural gas. So I'm still bullish on it. I do have a level up at 466 where I would expect to see at least a little bit of a slowdown, and that is not quite up to ADR high, it's just below it. And why? It is the daily supply. So that could mean a little bit of a sell-off. Now this one seems to be missing some data here, but there is this supply, right? So that's where it is, and we actually popped higher into it. So I would expect to see these highs taken out because they're practically equal highs. Whenever you see equal highs, double tops but double bottoms, if the price is near them, they're like poor highs and poor lows. That's what they're called in the profile. So when you see those, they will usually get run over and then maybe a reversal comes. So I do not want to be long if I miss the entire move. So if I do want to, like let's say worst case scenario, we go all the way up outside of NYMEX and we get to the time of day where we are close to these areas, I would actually go against the whole day sentiment purely because we have these double tops here. So that would definitely be something to consider. Right, let me have a look at silver here because okay, so it could be failing the auction. I'm going to, because this is the combine, I can do slightly more riskier trades here. But yeah, so it's failing the auction, popped outside of the initial balance. You can see it here. traversing through the developing value at the moment. And then this move that pushed higher, you know, it was a good move, but we didn't sustain above it. So there's a chance that they at least tag this GEX too. So we'll see. All right, let's have a look at some chat to see who's in chat. Say hi to everyone. So Chillian once again says, good morning. Good morning. Anya is here as well. What is the crime? Kevin Guy, Topol, Fiddle, Cedric, Goran. Oh, Goran. You from my ends. Dobro jutro. KM China says, when do we get DAX on Topstep? It's ridiculous. We don't have the major EU index to trade in the EU hours. I agree, man. I agree. Like, they obviously thought they were going to give it because these streams we started in July last year. And obviously there have been unforeseen difficulties integrating that into the current platform. And I don't know when. I know that they are working on a whole bunch of stuff, but clearly for now European indices are not a priority for them. So don't ask me. I'm just an on-air personality. I have no idea. But I did ask MP, you know, and he said, he was like, yeah, it's coming. Yes. I think he's like sick of me asking MP, when are we going to get DAX? MP, what are we get? Because, you know, obviously for me, I trade DAX at this time of day. And the reason why we started the streams last July was because they were going to bring it. And the way the conversation went is I said, well, I don't really want to start the Euro trade until we actually have DAX, because I'm not going to have anything else to trade, right? Because I don't really trade that early in the day. And the only time I traded anything was when I worked for a London prop firm. And what did we trade? DAX, FTSE, and Bund. That was it, right? I did not, like at that point, Forex was pretty slow as well. So we didn't even do Forex futures much. Like maybe every so often I would do like a pound futures trade. But I don't like Forex in general these days. It's still a pretty meh product. You know how crude oil dried up on us? Well, that happened to me with Forex because I was a swing trader from 2007 till 2012. Then we had the European austerity measures, then Greece went bust, and then a whole bunch of stuff happened. And while it was actually happening, it was a lot of movement, a lot of liquidity, and then everything stopped. It just died a death. And for years, for absolute years, when the interest rates were near zero across the board, like in the entire world, I think maybe Mexico still had higher interest rates, but you need the interest rate differential to kind of trade that. So even that wasn't really traded very much in the firm that I was at. And obviously DAX is quite important. So I said, you know, I don't want to start the streams because I'm not going to have anything to trade. You know, I can keep it educational for sure. But then they were like, well, no, we're going to bring it, so let's just roll it out and do it. And then it never came. So now I'm stuck learning to see how silver is doing. And the problem with that is that none of these products that we currently have, they're not particularly liquid. The volume is nowhere near as nice as it is. And you need volume. You know, you can't trade without volume. So most of the time when I do a trade here, it will be like a punt. It's like, well, it might go there, but it's never really a super high probability trade. My high probability trades on these products, on energies and metals, they start about 40 minutes into the LME open. So around midday, that is usually when I get involved. Outside of that, it's just like scalps, you know, seeing whether shorter term, and I don't like scalps. They knock me out. I'm an older woman. You know, I am going to be 45 very soon, December. And, you know, I just don't have enough energy to run through 2 sessions where I'm sitting in a trade watching paint dry. It does knock me out. So this is why you will see me on combines until we either move the show to the new time slot, and that is, you know, that is planned, or we get DAX, like one of the two. So until then, please bear with me. So yeah, London Open on metals is meh. Like, it's almost like as soon as London opens, like, look at how nicely you have Asia moving silver very nicely, and then as soon as London begins, so where's London? Here it is. So we have 30 minutes that sort of does something, and then immediately I don't know whether they go for breakfast or they just decide it's not something that they trade during LSE hours or what, but they're just like, yeah, goodbye. And then this is just like junior trader doing nonsense trades. It's like, let's do a range trade. But yeah. So expecting like huge swings every single day in metals is actually not a high probability thing. Now, yesterday somebody asked me on gold, what do you think gold lows are in for the day? And I said, definitely not, because it's very unusual to see gold creating a new low, like an absolute low of the day during London. Like, London lows get taken. That is the high probability play. But, you know, and then we had a big unwinding down. I think it pulled back at some point, but let's have a look at it on a 30-minute time frame because we can see what's happened. So where was London? London. This is Asia. Okay, so this was the yesterday COMEX. And then we have London. So here's London. Here's what I was doing my show. So when we had this, someone in chat was like, do you think the lows are in? And I said, absolutely not. And this is what happened during COMEX. This is why you don't call lows in an uptrending market during the London time, because anytime you're going to get a continuation of the trend, that usually happens post NY cut into the euro close, and sure enough, here it is, post NY cut reversal, right? We can see it exactly here. So post NY cut period for me is a 90-minute period between my 3 p.m. up to about 4:35 p.m. So that is a high probability time when we see reversals. Now, depending on what you trade, sometimes it happens immediately after 3 p.m., which is 10 a.m. Eastern and 9 a.m. Central. But other times, they will not turn it around until the London close happens. And then there's like almost like an equivalent of the MOC. But in an uptrending market, when you've had such a big pullback, you can actually swipe these pretty nicely. And it happens across the board, you know. I think energies are, if you're looking for a short setup in energies, you can actually find it pretty much right after 9 a.m. Central, so right after 3 p.m. my time. But even those, like let's say natural gas, it likes to turn around more often than not for lunchtime in New York, so after 12 p.m. Eastern. So yeah, that is a little bit different, slightly different. But yeah, across the board, 90-minute period after the NY cut, which is basically an option expiry in Forex that has a knock-on effect in the Forex-linked products, which is usually commodities. But equities have the same thing, right? You have a whole bunch of equities traders in London that will be closing their positions, and then that has a knock-on effect on the US equities as well. And there will be some people who trade ES and NQ and RTY and YM during London, and they don't want to trade after, right? So they will close their positions as well. So it's kind of like a mini MOC. And now if you've had a big uptrend on the day, the euro close is typically just a scalp. It's just a wobble back the other way. And usually then it hits either a GEX level or VWAP and carries on. So you have to take in context whenever you're looking at these things. So in the context of the uptrend on gold, we had a big pullback, and then the reversal post NY cut and into the euro close. It's a very beautiful trade. And then here we also had the COMEX wobble, right? So if I just block, oh, can I make this not visible? No, not without removing it. Okay, but you can see this red bar, yeah? So that's the COMEX settlement. And again, that's another time of day, so I call those a day range fill. So I post and I cut in day range fill. Both of them are fishing for reversals, and whether it's going to be a scalp or a bigger sort of intraday swing trade, it largely depends on the context. So in the context of gold, because it's in an uptrend still, the euro close wobble is one thing, but this one was a huge pullback, so not a wobble, but an actual opportunity to run an intraday swing. But be mindful of the COMEX wobble as well, right? Because you always have these like take profit moves that only last for 30 minutes. And then look what happened. Right after that, here's COMEX close, start of this candle. Just carried on and on and on and on and on. It's like a crazy market, right? But time of day is a level. Still works, right? And the same thing is true for certain products when they are, for example, DAX likes to reverse for the London Open, especially if Asia took it pretty high, then they smash the Asia high and reverse. Now today that's not the case. Today we actually managed to sustain above the Asia range, which is why I'm in this long. And we'll see what happens. Now, I would argue that silver, for now, is failing the auction, but they don't really seem to be getting involved too aggressively. It's just consolidating. So this is where the tricky part comes in. I'm going to look at big silver here, just for volume purposes. I mean, do we have any volume to read here? You know. So this is the entire London. Is there anything in the London session that starts here where we can say that the volume is an outlier, that we can kind of anchor something to for orientation? I would say no. So the only thing I'm going by, again, very limited information and data, is the fact that we went above the initial balance. We failed on the first try. But now, in order for the failed auction to be a true failed auction, we would need some volume to step in. If that doesn't happen, then it's not a failed auction, right? But for now, Delta has gone a bit negative, a little bit negative, and the bubbles are kind of mixed. Again, not much commitment to either side. But yeah. So DAX is trying to extend the prices upside from the initial balance. So here is the DAX chart. This red box is the initial balance. There's an average session range high near my target. So we're going to see what they want to do here. They're building structure. I don't like that. They're building structure. So we already have 3 TPOs. Every time I say that, as the right nerd that I am, I want to say C-3PO from Star Trek. C-3POs. But yeah, whenever it starts to build structure, I usually like to take some profits. So I'm going to just grab the $255 that I've got there and not wait for this to come back on me. Because that's not what I wanted to see. I wanted to see a clean extension upside on DAX. So I did get $255 on it. So it ended up being more of a scalp. Things changed. Doesn't look as bullish at this time of the day. And therefore, later on, I may look for some more longs in DAX. But at the moment, I just have a little buffer trade. So we continue on. And let's see this torturous silver. But I'm losing patience with silver at the moment as well. So let's close that. Because really, what I wanted to see a very decent bearish engulfing here. And I'm not one to go, oh, because it didn't go short, now I'm going to go long. Biggest mistake ever. In order for me to go long, we need GEX too. We need a call wall, or the very amazing setup, ideal textbook setup, would be if we roll all the way over to 80 or low, and then later on in the day, I swipe along. So that's currently not happening. So I was looking for a failed auction on the account of us failing the auction. Failing the auction. But yeah, there's no volume. Like nothing's pushing it. It's just literally like consolidating. And I'm not going to be sitting here in a silver trade for 3 hours. That's not happening. So I would rather take a little paper cut and then wait and see. So reset. So just kind of put that outside of your head and just go, all right, let's see what they want to do next. Right now, I don't have enough information. So we failed the auction. We're building structure again, even on silver. Looks a bit bullish. Do I want to be long here? No. So what does that mean? No action. Stay out. So I'm going to keep track of it, obviously, but at this particular time of day, this was not what I wanted. Natural gas, is there anything there? No. Suppose we're making lower highs. I'm grasping at straws here. It's inside value. Again, I would need to see a call wall tested. So if we get that, maybe I'll try along, especially if we swipe below it and then come back into value. And I am using NYMEX value because for all intents and purposes, London is not really that great. Like you can trade it pre-market. Again, from midday my time, natural gas starts to liven up as well. And look at this volume. Like, why would you trade that? It's like, but as midday comes in the UK, you start to see more commitment, more volume, more people getting involved. And I've actually done some amazing RBOB trades, fading it short whenever it extended during the London session. So, you know, energy's being a little bit more active during London and then going all the way to back where it came from. So it pops outside, creates a normal variation day into the pre-market, and I just loved doing those. And if we get that kind of setup, let's have a look at our RBOB actually. I mean, right now it's going down, so that's immediately not what I would want to see in that sort of a setup. This is previous day value, slightly underneath NYMEX value. And I'm going to use converted levels because RBOB doesn't have that much options activity, if any. I mean, the options exist, but I don't know how many people actually trade it. So I have some level of interest up at 202 from the options chain. Let's have a look at higher time frames, just to kind of orient ourselves so we know where we're coming from. All right, so we're coming from the top of the range. So shorts would be my primary interest in this area. Just kind of trying to delete all the stuff I don't need. Yeah, so top of the range, it means energies like to range a lot. And if we get some sort of an extension upside, I would want to fade that at some point. Now, intraday is one thing, but on the daily chart, we have this spiky trend, like inside bar, inside bar. Oh, yeah, we go higher, inside bar. So I don't like to see inside bars too much, but it does look better than crude oil, right? So if I go to crude oil is just so flat. It's like Hoop said it yesterday, actually, because Hoop and I talk a lot, and we both moan how we oh my god, crude oil is not the same, because crude oil used to be both of our main traded products for a long time, and it just completely had a personality transplant, right, 2 years ago. It's and he said it. He said I'm gonna say I miss crude oil, old crude oil, and I'm like, I'm with you, man. Like I'm gutted that we kind of lost an amazing energies market, but I sort of find solace in RBOB because RBOB these days is kind of like crude oil used to be. It moves enough. It has a 300 to 400 tick range, so $3 to $4 range, and it's beautiful. So behaves very similar to crude oil. Now this looks a little bull flaggy to me, so that's not ideal for shorts. And again, I would like to see an extension of that and then maybe go against it. But let me grab some of the other levels that we like to use here. If I can locate it. See what I've started doing, because I am running a Discord utility server now. It's just a utility server. I talked about it before for my levels, and I have to keep like 1,000,000 charts open, and I already had quite a few there. All right, so ADR high sitting at 203.70. Just going to do coordinates. And then change the style to red. The way I use RBOB levels is that I look at whether crude oil is also reaching that level. So for example, if ADR high and RBOB is already reached, but crude oil still has some space to get there, I will wait until crude oil exhausts its own ADR before I try a short. Because they are very, very correlated. So in a way I use crude oil as a benchmark to find more accurate timing for my entries. And that would be, so it's not necessarily a standalone chart where you just look at RBOB and that is all. It's a bit more labor intensive than that. I mean, you can, and it would probably work okay, just not as well as using crude oil as a guide. So same thing as VWAP, you know, for example, let's put CL on this other side. Not micro. So both of them 30 minutes. Clearly crude oil is weaker than RBOB. So what's happening now? RBOB is touching its VWAP. VWAP is being touched, but crude oil is nowhere near it. So what I would expect is that RBOB is going to show more strength until crude oil reaches VWAP, and then maybe you have an opportunity to short RBOB as the crazier product. So that's kind of how I would look at it. So I wouldn't use RBOB VWAP on its own, because it's not going to work, since this is the dude that's running, or the girl that's running the show. But yeah, so there is a definite difference in the movement. They both went down, but looking at the same reference point, crude oil is weaker. Do I want to go into crude oil? No. Why? Because this whole movement looks like it's massive, right? It looks like, wow, that was a good swing down. And then you measure it. And this is what's so, disappointing about crude oil. You measure it, and it's like, oh wow, yeah, we went like barely 70 ticks down. Back in the day, that sort of a move, if you would see it on the chart, it would be like 250, 300. And now it's like, oh God, it's barely like 1R, 2R maybe, if you swiped it all the way at the top. But the way I trade, I need to have a reaction first, so I would never catch this, or very rarely would I catch it like at the top of the swing, right? I would more likely catch it somewhere down here. So once we kind of definitely went below VWAP, and then how much profit would I get? So literally I'm staring at 50 ticks, and then also I'd never like to exit unless there's a reaction. So really, here's the problem with crude oil. If you get an invalidation or bounce from an area, I'm looking at like 35 ticks. That's like, it's a very small amount of ticks. I need to have 70 to 100 ticks of follow through in anything that I'm doing. Otherwise, there's like something missing in my soul. I don't know why, it's just the way I am. Maybe it's because I was a swing trader for so long. But yeah, I know myself, and I know that I can't trade a product that doesn't give me the follow through of like, at least like the minimum would be 70 ticks, absolute minimum. So yeah, I like the middle ground. So not too volatile, just volatile enough. So I gravitate towards products that typically have 200 to 300 ticks of average daily range. Ideally, I want the biggest part of that range to be done during regular trading hours as well. If you start to see days where it's supposed to be regular trading hours, but then London or Asia are taking over, it either means you're trading like metals, and metals are extremely, extremely lively during Asia, or you're just I don't know, running into maybe a slow period, like, you know, January, summertime, so something's up. So yeah, that's kind of how I approach RBOB and crude oil. So I do still look at crude oil. I'm just not using it to express my views in the energies markets. I have moved almost completely to RBOB, heating oil, natural gas, gold here and there. I've kind of paused it for the last 2 weeks, but silver recently, platinum, copper, a lot of copper trades. So yeah, Granny D needs very specific conditions. Let's have a look at copper. I am not going to trade copper today because we have CPI tomorrow and PPI Friday. So I will focus on the larger time frames. But copper is not on my radar today because we have a release that's going to be very impactful for this particular product. So tomorrow we can look at copper ahead of PPI. So the way I like to approach any news releases is to first and foremost look at the large time frames, because during the news releases, intraday levels will not matter one bit. They will be swiping liquidity pools, which is supply and demand areas, on at least a 4-hour time frame and higher. So any sort of tiny time frames, great name for a band, could be like a Topstep band. There's a lot of musicians. Tiny time frames. Like Dolby on drums, Hogue on the bass, me on sax or guitar. Can get Dawn to sing. Yeah, we just need, oh, and Jack plays piano, so perfect. But tiny time frames, the Topstep band. So yeah, so I focus on at least a 4-hour time frame. So where are the swing points of interest? So we have one here. We're already kind of bouncing from it. This is not a good high quality demand. Why? Because it only has like one big candle and then basically no follow through, no higher high, no nothing. So this is likely not going to be the area if they want to swipe it down, make everybody as miserable as possible, and then bring it back up. I reckon they'll probably go lower. The demand area, the demand area that we actually came from is here. That is a swing extreme in this recent development. Still untouched, a little bit flimsy to begin with, but still it's a decent quality area. So what is that? Let's mark the edge of that. Now, in an uptrending market, I would not look for the extreme low to be taken out because you would expect the demand in an uptrend to stay. And I do think that copper has a lot of room to the upside. So the conterminous line that I like to call the market shift point. So basically you had a consolidation, and then at one point that consolidation turned into a breakout to the other side, a reversal, mean reversion, however you want to call it. But I call the market shift points conterminous lines, meaning common price point. That's sitting at 93.85. So if we get down there and there's CPI and the numbers are good, I would be looking for longs or even as a bounce from that area and a continuation of the long. So that's definitely one option. This inside low here, there is a gap, tiny weekend gap here. It could bring a bounce. It's not super obvious. So I'm just going to mark that so I don't forget what the hell it is. So weekend gap, if they want to close that first, then 496, 495.80 is as low as they're going to get. And then if the numbers are not that great, they will likely want to bring it back all the way into 517 before any kind of a sell-off, because that's where the drop originating point came from. I'm just going to put a solid line there. And we're going to go 4-hour C sub. And then obviously once the release is done, I will trade the aftermath. I don't trade into it or around it. I wait until it's done. Yeah, this is the 4-hour CDEM, continuous demand line. And then today we can, we can look at some levels, but again, I'm not going to be trading copper today. Let's have a look. So ADR high sitting at 511.10. Yeah, it was a quiet day yesterday. And then ADR low sitting at kind of 5 evens, like just above it. But let's just round it up. Value areas, we have 2 overlapping values. So let's go down to the 30-minute time frame. 3 overlapping values. Wow, okay. Yeah, so here's one, here's another one, and here is the current one. But we'll see whether that continues today. I think they're probably going to be quiet and waiting for the actual CPI tomorrow. But on the 30-minute time frame, we have Asia low sitting at whatever this is, 502.50, and then Asia high sitting at 508.95. I think that today that's going to give us the definition of a range. And what's this? Some random line that I put there. So let's just mark that Asia high. Typically on quieter days, especially when Asia is at a decent range, I do not want to get involved until we're either failing the Asia high or Asia low. So I effectively expect a stop run and reverse with quite some volume. So the volume at the point of a break needs to have a sweep on bookmap. So you need to get those little dots that appear. And then I want to see a reversal that then holds into the Asia range that was just broken. So basically, exhaustion volume, return to range, and then at least a 50% reversal through the Asia range. That is my target. But actually on copper, 75% happens quite frequently. It's just that 50% traversal of Asia range after the liquidity grabs, it's more common. So just depends what you're in the mood for and what your ego is dictating. But yeah, so I think we're going to stay contained today in copper. So not much to see there. I mean, I think all of the the GEX levels all smushed together as well. So we have GEX2 at 507. So then we have GEX4 at 508. Then we have the HVL at 509. And it's like, give me a thick bucket. I do not like it when I see this high concentration of a ton of GEX levels, all in the same range. Terrible chart. So the copper has an ick factor to me today. But yeah, natural gas and silver are looking prettier. So therefore we're going to be trading that. Gorillionaire says, highlights is from Star Trek, but Gorillionaire has it right. C-3PO is indeed from Star Wars. Please could you share settings on your volume profile in Project X, time window, covered, row size. Are you talking about the visible range volume profile or the fixed range? So let me know and then I'll share my settings, because obviously if I start sharing my visible volume range, and you're like, then that's not what I meant. So let's see what you want. Yes, I'm mate. I'm a Star Wars nerd. In fact, if you look behind me and you kind of squint, you will notice a Grogu official Disney doll. That's how much of a nerd I am. And even my sister knows that, so she made, because she does like these crocheted animals, and I showed this before, but hold on, let me do the producer thing. So if I show you these guys. Now, unfortunately, one of my dogs got a hold of it, but my sister made this, and she sells them. So she makes these little like puppets, but she makes everything. She makes bunnies, she makes like a whole bunch of stuff. And if you see Grogu over there, blurry in the background. So yeah, I'm a massive nerd. I even have like the mug that says choose your path. Because obviously that's what happens in Mandalorian. So yeah, huge fan. KM China says, yes, I'm in Hong Kong, so we need an index with decent volume. Yeah, that's what I've been trying to argue for everybody. I said, what about Asia and Australia? We have traders there. Can we do something? And people say, yes, we'll do it. Well, we're having problems with it. Yeah, I promise you, I have badgered him for 18 months now. He is sick of me. He probably has nightmares about D wanting DAX. It's like, waking up at night. Yeah. I thought they're not going to release CPI tomorrow. Well, it's on the calendar. They said they're ending the shutdown. They released it last time. Yeah, it was a good number, and they were like, yeah, let's release it. So I reckon if it's a good number, they will release it again. So yeah. Goncalves says, what time is London open on M&Q? I'm always confused about this because there's no difference in volume. Yeah, because London is not the RTH, regular trading hours. London is an out-of-hour session, and it's not a major thing. It's not like New York where it's like, right, we're going. And by the way, New York equities are bonkers, like totally total craziness at the open. London open, even on DAX, is really not that violent. The only way I can describe it is violence. The NQ just wakes up, chooses violence. Where is my DAX chart? So I will show you the London opens because I can go back in time. So exiting the DAX trade was the right call there because it's still sitting. So look at, so you can go back and see, so this is the open, and the volume does kick up. Now today we do have, an attempt at a push higher, so this is a little unusual. But then let's go back the previous day. Let's increase these candles because we're not old. So basically I have Asia, and it's like, yeah, pre-market, starts to move. Then London opens. Like, if you didn't have the profile there, if you didn't know that, like, 8 a.m., and yes, London opens at 8 a.m., so somebody was asking that. If you didn't know that it opened, like, would you even know? Now, there is a thing with DAX where Eurex is the one where they kind of start things, but Eurex is such a small exchange volume-wise. I mean, look at it compared to London. So this is Eurex, and then volume comes in really when London starts. So I don't really trade Eurex, and a lot of the time Eurex will go the opposite way to what the London is trying to do later. So what I do on DAX, and the reason why I'm starting these these sorts of streams, like the reason why I picked this time of day is because at 9:30. So this is 9:30. When I would start my stream, you would usually get either a failed auction, and then if that wouldn't happen, you would get a neutral day fade or some version of it that you can then run for quite a bit longer. And then same thing, Eurex opens, nothing really. And then, so, DAX is not as crazy. It's just you get a kick up in volume. It's smooth as hell. I absolutely love this product, and I'm gutted that we can't trade it yet on Topstep. I'm absolutely gutted. I'm not gonna lie. It's it's my baby. Yeah, I love my DAX. Chilling once again says, any tips on not getting greedy and taking profit before a trade goes red? Set your target to be statistically viable. Like, I don't know anything about your style, so I'm just saying what worked for me. Set it to 2R multiples, like whatever you're doing. Set it to 2R, because 2R multiples, if your accuracy is anywhere over 40%, near 50%, it's a very stable risk model to have. And I'm not in favor of this or that. However, in experience has taught me that people with very high win rates, like 70, 80, 85, 90%, those approaches tend to be not as long-lived. So, for example, somebody who has 40% accuracy and has a 2 or more R, like typically I will have between 1.7 to 2.3 R multiples, unless it's summertime. Then I kind of go for more scalps because it's a range-bound market. But then it kind of falls to 1.3, but my accuracy increases to 66, 70%. However, as soon as I notice the bigger swings being the probability, I will default to 2R multiples as like the standard take profit target. And only if I feel that we have some kind of a single direction day reversal coming and I went in really early, because maybe I saw a failed auction or something, but I want to ride it for the rest of the day. That would mean that I will expand my risk reward to whatever the market gives me. So I don't necessarily have, outside of the time-based stop. So on those days, I will do the time-based stop. So I still have an exit strategy. It's just not price-based. However, if you're struggling with greed, because I don't have that, I really couldn't care less. But not to say that I didn't struggle in the past. I did. And one thing that worked for me is just to have a 2R multiples as a standard. Done. So whatever you're doing, just have a fixed target. And whatever the market does after, you should not care, because it's not inside your plan. That's one thing. Second thing is, if you are more of an intraday swing type trader and you want to catch bigger moves, have a time-based stop. Why? Because I mentioned at the beginning of the stream, I don't know whether you were here, but we have, for example, Euro close, we have post NY cut, so that's 10 a.m. Central is post NY cut. Then you have the Euro close at 11:30 a.m. Eastern. And then after that, on metals in particular, you have COMEX. For copper, you also have the London Metal Exchange close. So depending on what you're trading, there's like different times of day when you should look for that MOC equivalent, effectively like the take profit move into the end of the day. But yeah, so have 2R multiples, or if you're running swings, have a time-based stop. And you have to follow that. How you make yourself follow that, that's down to you, because we all have like different life experiences. We've all had different ideas of money and what it represents to us. And for me personally, I do come from a fairly abundant background. Like, we were not like lords or anything, but my dad was a Serbian rock star, and I lived a pretty good childhood with a little caveat that we had wars. So even though we had money, you couldn't buy anything with it. There's a bit of a weird sort of situation where you would go to shops, and because we were under sanctions and embargo, we had no goods. Like, all the shelves would be like empty. So it was a very big sort of dichotomy between me not having issues with money, but the country having problems, and then the money just did not really matter that much, if that makes sense. And then obviously I also lived through the bombing of 1999, and that sort of changed my my outlook, I think it shaped my views that money is just money. And even though I've always found ways to have it, it doesn't really have as much of an effect on me as on some other people. Because I think if you come from more kind of rags to riches, you're looking to hoard money and you're looking to have as much of it as possible. Whereas I'm more in the camp of like, well, if I have enough, I'm happy. Like, I'm not looking for, extraordinary amounts of wealth. I'm looking for, abundance, yes, and I have that, but I'm not like, right, now I need to get to like 50 million or 100. Like, I will never chase that. And I just don't get it. But that's because of the way I was brought up and my life experiences. It doesn't mean that it's the same for everybody. So to me, whether I make, and I look at everything in ticks, right? So to get back to the trading side, if I made, 70 to 100 ticks on a trade, I couldn't care less if that's 70 to $100 on a micro, or whether that's 7,000 to 10,000 on, 10 minis. So it's really down to you being okay with not looking at your P&L. That's another thing. So you know how a lot of the times I will hide everything related to the monetary side. Now that's not because like, oh yeah, I don't want anybody. No, it's for my own sanity. Because if I have my account balance in front of me, I will inevitably go to trade that. So I will be not focusing on the process. I'll be like, well, I need this much today. It's like, well, you don't need anything, Dee, because the market is not here to give you gifts. You have to be the one to extract it from the markets. And that means process over profits. Every single coach at TopstepTV, every single trader that's ever been on TopstepTV with some success, that that's what we all preach. And this is a part of it. So that's one thing, blocking out all P&L related stuff. And the next one, I think it's in... Now, I changed it so long ago that I don't even that I remember where. Oh, here. So it's in charts and data. Usually the core setting, the default setting is dollar values, but I don't want that. So I like looking at ticks. Why? Because then every single trade, doesn't matter what size I'm trading, it's the same trade. And granted, once you get above like sort of 40, 50 lots, there is a thing where you have to build the position around the zone because you can't just plow in, especially not on my products with 40 contracts. It will either not fill you or you will make sort of a dent in the order book because, even if you look at silver, full silver, let's have a look at it. I mean, it's so thin. How many contracts are on the dome? 2, 7, 8, 8. So if I were to execute a 40 lot, let's say long, I would have an effect on all of these guys because you have to have a counterparty. So do we even have 40 contracts here? So I suppose this is 10, 20, 33. Yeah, just about. But I will move the market with that order for as many contracts as these guys have, right? So, and it becomes a little bit scary. Like I did that a couple of times in RBOB actually, because RBOB is really thin. And towards the end of the day, once the settlement goes through, sometimes I would still have a position because sometimes it moves after market. And one time I was like, I think it was like in 2 or 3 contracts, but he was so thin because if I look at RBOB now, it's going to be thin. It's going to have a lot of gaps. You see that? And I was in with like 3 lots. So I exited one lot, it jumped on me. Like, I think it was like nothing. And then there was the next sort of liquidity was, further out. And it jumped. And I was like, whoops. And then again, I'm like, I have to get out of the market. So I did it again. It jumped on me again. And I was like, oh my God, broken RBOB. So it gets a little scary. This is why we say that live trading is a bit different than sim trading, because that will never happen in sim. Like, nobody cares if you're exiting or entering positions, because it's all simulated, right? They try and match the orders, but it's still not, and you will never have an effect on an actual price because it's not going out to the market. So yeah. Anyways, time-based exits, so time-based targets and or 2R target. So try that and see whether your greed goes away. Hide all of the P&L, change the display to show ticks, and stick to the process without greed and without looking at the monetary values. That's probably the biggest takeaway from that whole rant. John Hall says, hi Deeyana, what are the times you use for the London Open? And would the opening balance be, you mean the opening balance? So no, so okay, so yes, the open is 3 a.m. New York time, 3, 4, 5, 6, 7, 8. Yeah. The initial balance, this is I think what you're saying, is just an hour. So 8 to 9, so that would be 3 to 4 a.m. Don't know where you got the 4:30 because initial balance is usually just the first hour of trading the way it was back then. Arguably, equities maybe could be just done in like half an hour. So, you know, I think this is what Dalton was talking about as well. Like initial balance, not that important. To me, it's still very important, especially in commodities. But I do think that equities have got to a point where the first 30 minutes is craziness. And then you already have the events that happen right after. That are a little bit more digestible and not as insane. But yeah, it's always the first hour of trading. So London, regardless of what you trade, for this time of day, the LSE, London Stock Exchange, that is 3 a.m. Eastern to 4 a.m. Eastern, and then you're done. Then you look for extensions. When it comes to metals, though, we do have the London Metal Exchange, which is a bit trickier because it actually opens at an odd time. It opens at 11:40 a.m. And I'll tell you what that is in Eastern time. Do I have time zones? I do. So let's go to New York. So 11:40, my time is 6:40 a.m. New York. And what actually Coach Jay and Hoop like doing that, they actually anchor their VWAPs on the LME Open. And a lot of the times it can give you a really good idea of whether you're holding above VWAP or whether VWAP is breaking down, just based on what the LME Open has done. So that's one way to approach it, but I don't know what you trade, John. So yeah. If you trade equities, then LME is of no importance to you, right? All right, let's have a look at the CL here as well. No, CL is diverging now, so we're going to pause that. Just looking around the markets, having a sniff to see what we're doing. Okay, so natural gas is getting closer to that coal wall, so that's good. They did not go higher. That was me attempting a posh sort of RP accent. Let's have a look at silver. Micro silver. Okay, so didn't even touch GX2. That could be a sign of strength. Still inside a range. So now, once I have that range, and if it's not LME Open, so if I still want to pop in a swing, I would have to take in this range. This is something I don't like doing, actually. This would be Dolby's, like, heaven. Dolby's like, yes, it's a range, awesome. But basically, I would be looking for a swipe into GX2, maybe slightly below it, and then a reversion to the mean. For my liking, this range is too small. So whenever I do range-bound conditions and setups, I actually want to base them on the entirety of the initial balance or the value area or some sort of a bigger range. Whereas Dolby is the kind of trader, he will trade any range, doesn't matter what it is. If it's a smaller range, he looks for full rotation. If it isn't, then he will take like middle as a target. But yeah, for me, this is just annoying. So yeah, I'm going to wait for a little bit later in the day to get my next trade, because obviously I have the DAX one. And no matter how many accounts I'm working on, you know, obviously it's a combine, I have my Topstep Live, I have my own account. So I always try to never do more than 3 to 5 across the entire day. Sometimes it will be in the same account, but other times it will be in different accounts because I'm like, well, this is actually a pretty strong setup, so I want to do it in my live. But this one, I want to do it, but it's not as strong, so maybe I'll just do a combine instead or something similar. But yeah, so range on silver, surprise, surprise, this time of day. We're chopping around. So I'm not really seeing much else. It's all very quiet. Gold is pretty flat too. Very spiky again. Yeah. So yeah, I don't think I'm gonna find another setup here. And again, shame we can't do DAX. Let's have a little look-see at DAX, what it did. Right, so DAX still consolidating, so I am actually okay that I got out of that. I will want to see that test of at least VWAP, maybe test of 350, because that's a irrelevant options level across the board. Yeah. So that would be a good strength inside initial balance setup. Now, if it goes lower, I would love to do the neutral day fade, but if not, 350 would be my orientation point for any further setups. This is now too high up for what I would be trying to do for this time of day. And as we get closer to the pre-market trading, there's more chances that they go into a bit of a pullback before continuing the uptrend. I am looking at longs though, so I would not be shorting on the account that DAX has gone above the Asia range, and it's still holding above it. So if we manage to get anywhere 350 to 300 as well, and then bounce from the former Asia high, that would be an excellent trade location for further longs as a continuation. But yeah, remains to be seen. So I have to wait for a pullback. Right now we don't have it. And I think that will be it for today, sadly. Yeah. What time do I use for RTH for copper or gold? So I do use COMEX. So if I'm looking at value areas and stuff, I will use COMEX values. However, I will be very interested to know how the former overnight low and high are behaving at LME open. So, okay, let's finish up with that. So let's illustrate. Let's go to copper. So let's say that we're looking at yesterday, right? So let's have a look. So LME opened at 1140, so I need to go down. So 1140, where is it? Here, okay. Now, copper trades at a 5-minute increment, but they do have this thing called LME Select that loves to take out the previous lows or highs, and that's the first thing that I will look for. So 1140, that's LME open. Doesn't look like much, right? But notice what happens with the overnight low. So the overnight low was, okay, so in this case it was down here, and they actually held it. But there is something that happens with volume. On a lot of the days, overnight low would be broken and then they go higher. But the testament to the bullishness of this product, and I can see that they did it later, but this was, I think, this was post and I cut. Of course it is. This would usually mean that they will take one side of whichever one is nearest, And actually, let me have a look at where the Asia high was on that day. So there it was. Did it smash that? No, it was very range bound. But what happens is when the volume increases, I watch how the market behaves around the overnight low as LME starts trading. And you can see it here that as we get closer and closer to the COMEX open, they start to increase volume. So this is slow increase. So here's when LME starts waking up. And then finally they get close to the lows. And on this occasion, LME did not take the overnight low, but there are times when it does. That's a high probability setup. But what you would want to see is actually what happened post NY cut. So we broke the overnight low, then reversed. And granted, yesterday it was a very, very quiet day. So maybe we can go to the previous day. That could provide a bit more, value. Okay, so looking for LME open, There it is. And what tends to happen is that if you anchor the VWAP to the LME open, you generally get a very good idea of what they want to do and when they're trying to reverse it. Let's make this a bit thicker. Okay, so LME open happens. And let's have a look at highs and lows for the day. So overnight, yeah, so here it is. So overnight high was right here. And the first order of business is for them to test somewhere closer to the overnight highs. Now, overnight lows on this day were very, very far away. And then you can basically swipe it on the liquidity sweep that LME likes doing. Sometimes they don't do it. If there's not enough volume, obviously this is very quiet. But then you get this really nice pump on a 5-minute time frame. You get this big exhaustion volume, and then you get a reversal. So that's the kind of thing that I look for once the LME opens. I wait for the first 20-30 minutes to go by, and then I will wait for that setup. Sometimes you have the ADR that is already exhausted, but then LME brings a complete stop to that. They start to bring it over, and then the complete change of sentiment happens. But throughout the day, LME anchored VWAP can actually provide you a better idea of when they really want to get involved. Because look at this, we had VWAP from Globex. They didn't really do much, but then as soon as we crossed the LME VWAP, it just exploded. This was a day when the government shutdown was announced, but it's like, why do it here? Why not do it here? You know. And then on other days, you have really nice trends. They just keep going. They're outliers, but they are there. And anchored VWAP from the LME Open provides support, or resistance, obviously, if we were going down. But usually copper tends to go up. So it's one of those interesting things you may want to look at in addition to COMEX. But RTH is still COMEX for copper. It's still COMEX. So if I'm going to do, a swing trade, I'm probably not going to be looking at it during the LME. But if I want to do a liquidity grab based on Asia highs, Asia lows, and I feel that that's a better choice for the day, maybe we're opening inside value or something, we haven't had too much movement, I would be looking at 40 minutes after LME open, sometimes 20 minutes if we're really close to the overnight lows and highs. But it's a little bit contextual, obviously, so and every day is different, which is amazing. All right, that is it for today. So I'm going to, Danny, I have my own strategies, so I don't look at other people's at this point. I will maybe pick up a couple of things here and there from colleagues, but at this point, after nearly 2 decades of doing this quite successfully, I'm not going to go to some random website and go, yeah, what is your strategy, guys? So I have something that works for me, and I'm not going to mess with that at this point. But thank you, I do appreciate it. So maybe some other people are interested in it, for sure, check it out. But yeah, I'm certainly not going to use other people's indicators when I have order flow tools, so, and my own algorithms. Yeah, apparently we're all ICT, Edward. Yes, he is the algorithm, don't you know? But yeah, all joking aside, the concepts are valid that he talks about. It's just, I think it's a rehashed thing that we have all known about for much longer. But yeah, hey, if somebody wants to be an algorithm, let them be an algorithm. You know, I would like to be a puppy, but can you do that? You know how all these people are like, oh yeah, now I'm a man, or now I'm a woman. Well, can I just change species? Because I don't really like human. Can I just be a puppy? That is all I have for you today. Hopefully you found useful information here. No good trades again. You know, this is a tricky time of day. But hey, we got one little DAX trade that I wish we could do on Topstep, and hopefully we'll be able to one day. In the meantime, enjoy the rest of your day. I will see you again for the Euro trade tomorrow. I do think that is it for the main broadcast, although next week it does look like I will be on the main broadcast a couple of times. So stay tuned. Control that risk. You know, try to work on your discipline. Don't look at it as some big bad wolf. Just look at it as another thing you do in a day. And the longer you force yourself into these deliberate behaviors, the easier they will become. That's all I have for you today. This was the Euro Trade. I'm Mark Zucker D, and I will see you very soon. Take care.